Hello, welcome to my channel. Today I am going to cover gap up and gap downs in terms of charting or technical analysis, understanding what is gap up and gap down, what are the possible reasons it could be formed or you can see gap up gap downs, and how to understand it and how to understand the price behavior due to gap ups and gap downs, and how naturally gap up and gap downs are treated in the market. So I'm going to explain with a simple three examples. But before going to the examples, what I would like to maybe help you understand is what is gap up and what is gap down. So gap up, as the name suggests, that there is a gap from the previous closing price in terms of the price. Let's say let's say a stock closed at 100 and next day it opened at 105, so there is a 5 rupee gap up. So the reason it could be there is some positive news, or there is a high demand in this stock where you have more buyers and sellers don't want to sell at 100, they want to sell at 105 or 106, and buyers just go with the flow and buy for that higher price. Similarly in gap down, as the name suggests, there is a gap between the closing and opening price between that for that underlying. So if let's say a stock closed at 105 and tomorrow it opens at 100, there is a gap down. So as I told you in a gist, that let's say this, let's concentrate on example 1. The previous candlestick is let's say this, it opened at 90 and closed at 100, let's say, making a high of 102. Next day, let's say there is high demand for that particular stock, or quarterly results are good. So next day it directly opened at 104, let's say, and went to 110 and made a high of 110. So there is a gap between the closing price and opening price. So this is one of the gap ups. And similarly, if you see in the example 2, there is a gap down. If you see, this is the gap which is there between the price, and it is covered with lows, wicks, I would say wicks, which means lows and highs. And what next day happened, that it covered this gap. So this is also one example of gap down. The next example of gap down, what I'm trying to say is, uh, price, this is the opening price, this is the closing price, and then there is a gap down and further reduction is price. In this case, actual gap down was this much, and then the price went up and closed here. So this is an example of gap down, where the gap down is this much in this case, and here it was more. And what usually happens with gap ups and gap downs is that they recover whatever the gaps are there. Usually in a good underlying or a good stock, the gap up and gap downs do get filled. It is one of the, I won't say terminologies, but a assumption in terms of technical analysis, that it could happen that the gap ups and gap downs are closed. So I will take you through few examples which can help you understand gap ups and gap downs in real market scenario, how they work and behave. So this is an example of Reliance Industries, uh, and this is a daily chart. Start. And I am going to show you few gap ups and gap downs and how they behave, and the point which I was trying to say, the gap ups and gap downs do get filled. So this is one good example I thought of sharing. So if you see on the left hand side here, see you have gap ups, gap ups, gap ups. Let's say 4 gap ups. There is a huge demand. And what I was just saying you 1 minute before is that these gaps do get filled sometimes, or most of the time. So if you see there, you have gaps, gap up, gap ups, and then the price went down. So these gaps which were created got filled. So and in the gap downs also, you have these gaps. Let's say it closed at 2047 and then it opened at 233. So the gap downs also are filled here in this up move, let's say. And then again, if you see here in this particular region, that there is a gap down, and uh, and the price sustained, and then again this gap got filled again in the later stages. And also here you have a gap down, let's say this particular candle, and then again the price filled this gap, or the price gap which was there. And if you see again, there is a gap down here on 8 to 10 days back, and oh sorry, 14 15 days back, and then it created a base here, and again the price got filled. And if you again see here, there is again a gap where the Reliance stock closed at 1960 and directly opened at 1978. Now if you see this particular candle on the this last day, it covered this gap again. So there are few cases where the gap ups, or there are runaway gap ups. There are different kinds of gap ups also. Few are runaway gap ups where there is a huge demand and the stock just goes up because of the increased in demand or various reasons. But most of the cases when the stock is moving sideways, like in this case, what we saw is that the gaps are getting closed properly. So I thought of sharing this particular topic downs and gap downs and how they behave in the market, and thought of sharing this particular example. Do like, share, and subscribe if you like this video, and if you like my videos, do subscribe the channel. Thank you. Thanks for watching.